Hey guys, this is Kyle at ProjectionHub, and in today's video, I'm going to talk about the 7 key ingredients that I think really impact and will increase your odds of the ability to get approved for an SBA loan. So this could go for, startups, acquisitions, expansions, and I'm going to show you an example for each one of these 7 and kind of how that can be communicated in an application, put in a business plan, that kind of thing. I lead our business plan writing services here at ProjectionHub. Before my time with ProjectionHub, I was an SBA loan officer for about 7 years. And so have reviewed and worked on hundreds and hundreds of business plans and loan applications and just kind of seen a lot of these. And so I'm going to be, kind of sharing that insight and offering you some examples and free things you can do to help that along the way. So if at any point you have a question, feel free to drop a comment down below in the video. We answer questions there. You can contact us at support@projectionhub.com to get a direct response. And yeah, let's go ahead and jump into the video. All right, here we go. Now, I have pulled up here an example business plan to demonstrate a few of the points just to give you some examples. And so, yeah, we're going to go through these. Now, they're not necessarily ranked in importance of most important to least important, although there are some that carry a little bit more weight in regards to being like non-negotiables and how much they can move the needle in an application. So I'll point those out to you. And so, yeah, let's just kind of jump right into this. Oh, and I should mention right before I jump into this, if you're considering SBA and that's a thing you're trying to figure out, like, what are my odds? And should I go SBA? Will my business qualify? Those are all very valid questions. I'm just going to point out to you, we do offer a free SBA expert review. So this is not a sales pitch, like a paid sales pitch for you. Just letting you know that like all the questions you're having are totally valid. It's a confusing thing. A lot of people don't know, if they're considering buying a business or starting a business, or they have a business, they want to expand it, just like what are their options? And could they even get approved if they want to? So go ahead and check out this free SBA expert review. I either hear from myself or our owner, Adam, who has even more SBA experience than I do, about your situation and some recommendations for you. So that's linked down below. You can go do that. Okay. So the first key ingredient, and I hope I don't lose all if you're out there watching this, hope we don't lose all the viewers when I mention this one, but it's going to be your personal financial and credit standing. So before you turn off the video, let me elaborate and give you some alternatives here, but it's a non-negotiable. If you have a really poor personal credit score and you have no money saved, an SBA is not going to be the right option for you. I'm not saying there aren't other options for you, friends, family, credit cards, whatever you want to do. I'm not condoning those things, but just saying that, it's really important if you want to get an SBA loan. You should probably consider like a 650 probably minimum credit score. Yes, there's going to be some lenders with leeway on that, but also there's going to be some requirements to invest some of the money personally. So, if you're looking for a $500,000 SBA loan, they're going to expect you to be investing probably at least 10% of that into the project. So that's 50 grand there at least coming out of your pocket into that project. And so, yeah, if you're concerned about your personal credit or financial situation, some solutions for you, going to sound kind of silly, but 1, save money. 2, really work on your credit score. Try cleaning that up. You don't need an 800 credit score to get approved for an SBA loan. It just needs to be pretty clean and trending in the right direction. Okay. So dispute medical bills, whatever you need to do to get that kind of going in the right direction. Consider a cosigner. So if that's a spouse, if it's a parent, if it's a sibling, whoever it is that might have a solid credit score, consider having that conversation in advance before you go to an SBA lender. Because that's probably going to be a requirement as you're doing that. So that's something to keep in mind. That is going to be important. I know people say, I want to keep the business and the personal separate. No matter what business entity structure you set up, that is just the reality of getting an SBA loan. You will have to personally guarantee it, and they're going to be looking at your credit score and your personal financial situation. Number 2, kind of another non-negotiable to an extent, and that's going to be relevant industry experience. So, if you're trying to start a business or especially buy a business, acquire a business, the lender wants to know that what you're doing. So, have you worked in the industry before? Have you worked in this type of business before? Are you really familiar with it? Do you have transferable skills, even if you've worked in like maybe a different type of industry? So, maybe you worked in marketing and you're trying to open up a coffee shop. The fact that you have some really valuable transferable skills, maybe you've managed people before, obviously you've advertised before. Those are really important skill sets and you can transfer those. But that's going to be an important thing to a lender. So some things you can do to supplement that. 1, I literally knew a person or a client that I worked with that wanted to open up a wing shop, but they had never done it before. So on the weekends, they got a part-time job and worked in a wing stop for like 6 months to try to like learn the inner workings of it. That's an extreme version. That's something you can do. You can add a partner to the business. So, if you know someone who has the direct experience, you can add them as a partner or maybe a key employee or a manager or something like that. Those are some ways you can supplement that, but you're going to have to be able to demonstrate that kind of like, what you're doing, to kind of get that buy-in from a lender. Number 3, and that I know I haven't shown you any examples over here, but in this business plan example, like here was a person starting a direct pay medical clinic, and they have direct experience as a doctor before. So I know that that's kind of an extreme example of experience, but these are ways you're going to be able to demonstrate that. So number 3 I'm going to mention is realistic, reliable, and believable projections or cash flow. So if you're a startup, obviously there's no cash flow in the business yet. So you're going to be providing financial projections, and we want to make sure that your lender believes that they're solid. Okay, so making sure they're legitimate, and that they actually cash flow. So this is probably getting a little technical, but lenders a lot of times want to see a business with a debt service coverage ratio of 1.25 or higher. So that means for every dollar of debt, you have $1.25 of cash flow, right? So you're going to be able to make the loan payment plus a little bit extra so that the business can operate without a hindrance there. So having good financial projections, if you're starting, buying, or growing a business, you're probably going to need financial projections. So, those are all going to be good. Now, what they're looking for is going to differ between an acquisition or a startup. An acquisition, it should be cash flow positive. If there's a loss, can that be explained through some seller add backs and some things like that? But just know that solid financial projections are going to be a key thing that a lender wants to see. And so, especially if you have questions about financial projections, reach out to us. That's something we help out a lot with. Number 4, proof of demand. So I say macro and micro level. I'm going to try to keep this relatively short. Now, is this going to dramatically move the needle? No, but it is going to be a supportive thing. So some industry-wide data can be good, but what I find to be really valuable is when you can demonstrate, especially if it's going to be a localized business, so think retail or something like that. Is your target demographic represented? You want to make sure that that's true. Have you done a pretty solid competitor analysis? Is the target area oversaturated? If there is a lot of competitors, show examples of, maybe some of the competitors have really poor Google reviews or something like that. So you want to make sure, you're upfront about who the competitors are in the area. Don't say you don't have competitors because you're going to do it a different way. That's not real. You got to make sure you cover your competitors. Local demand trends is a good one. I like to use things like Google keyword planning tool. You can see how often are people searching for specific phrases within a target location. So you can see if, this year more than last year are more people searching for a specific thing, like a laundromat near me. That's a really good way to demonstrate that there's some local demand. So that's a way I like to do it for proof of demand. That's going to be more specific, I would say, to startups, but there's a case for that for acquisitions and expansions as well. Number 5, customer acquisition and traction. So this is going to be pretty specific to startups, but you got to do more than just say, hey, we're going to have a website and we're going to run some ads. So again, is this one going to be the deal breaker for approval versus not? No, probably not, but it can definitely move things in your favor if you've got a pretty good plan. So for example, this business plan here, where is it at? Something that was really, really strong about this application was it's a startup clinic, but the owner, I gotta find it. Here we go. The owner already had a pretty significant Instagram following. So she had built up providing some medical pointers and answering questions on Instagram. And then secondly, she had created a wait list she had been communicating to her community that she was planning on opening this clinic and wanted to do that. It has 19 families on a waiting list. So that's as tangible as it gets for demonstrating hey, we're not even open yet, but just so you know, lenders, 1, I've proved that I can build a following. 2, I've proved I can get people interested in what I'm doing. And 3, I have people waiting here to be served. There's going to be, money coming in on day 1. So that's a big thing. Number 5, demonstrating how you're actually going to get customers more so than just saying we're going to have a website. Other examples of that could be, are you serving your cupcakes at a farmer's market? Are you doing something as a side gig? If you want to open up a salon, do you already have some people who you cut your hair for? So there's different versions of that. Number 6, a detailed plan of demonstrating like the location, the operations, your vision behind things. So again, this is going to have some variations. Again, if you're a startup, acquisition, or expansion. Startup, you kind of need to show everything, right? So in this case, they had a floor plan for how it was going to work. They talked about the tech they're using, the day-to-day workflows. Now they were keeping things very lean. So it was pretty much just going to be the doctor working by herself for the first year and then slowly expanding. So the operations are pretty straightforward, but like, especially if you're in acquisition, this section is going to be a little bit more detailed. So you're going to be talking about that transition that's happening. Do you have the people in place to be able to take care of all of the roles that need to be done? What's your management game plan? How is the ownership? How are you as the owner going to be involved in the day-to-day operations? So you want to be very specific if you can. I'm not saying you need to write 15 pages, but it needs to be specific and not overly vague. The lender should be able to read it and be like, yeah, they've got a handle on things when they're reading that kind of section. And then the last key ingredient, number 7, and that's going to be not every type of loan request or application is right for every single lender. So trying to find the right lender, and maybe that sounds obvious, but I want you to get it in your head now that just because maybe you've banked somewhere for a long time, 20 years, 30 years, or maybe there's a bank right down the street and you've grown up in a community for a long time, does not mean that they are the best lender for you. The lender's decision-making process isn't coming down to how well they have a relationship with you. It's coming down to things like the bank's internal policy, their appetite for risk, their portfolio weights, which, maybe they've made more loans than they're comfortable with to hospitality industry. So they're trying to diversify that a little bit. There's a lot of different components there. What's their specialty? Different lenders have different specialties. So there's just different things there at play that it's not about you necessarily. And so there are some things you can do about that. We offer a free SBA lender finder tool, which basically is data straight from the SBA. So you can filter, who's making the most loans to auto repair shops in Texas. So you can see which lenders are doing the most activity there. And that's probably a better place to start the conversation. But it's also worth mentioning, like I pointed out at the beginning of the video, we offer this free SBA expert review. And as a part of that, we'll make some recommendations and some pointers, some lenders who might be a good fit for you, as well as some of these other components I covered in this video about, like, do we think you're missing any of these key ingredients? What are some of the things you should work on? So that's my 7 kind of key ingredients there for an SBA application. Personal strength, the relevant experience. Those are really, really big ones. So if those didn't resonate with you, I would really recommend working on those things. The rest of them is just about how you communicate your plan. So if you have questions out there, again, drop them in the comments below. You can reach out to us at support@ProjectionHub.com. Get your free SBA expert review. I promise you it is free. And it's very valuable. I think a lot of people have benefited from it, and we would love to learn more about your situation and help you too. So give the video a thumbs up, consider subscribing to the channel if this was helpful, and we'll see you in the next one. Thanks.